How's it going, everybody? Brian Hoops here, Midwest Market Solutions. Insider TV closing commentaries on Tuesday, October the 31st. Thanks for joining us. It was on RFD TV earlier today. We sent out the link to it already, posted it on our website. If you didn't get a chance to look at it, go back and go to our website and listen to the interview and watch the interview there. We're looking first at a chart of hogs. We gapped higher this morning on the opening, but when we went above this resistance, 65.75, 65.90 area, this is where I thought key resistance was. You can go back all the way here to June, acted as good support, acted as resistance after it was broken in September, and then we got above it, and then off to the races we went, really soaring higher here in this hog market. And notice how counter-seasonal this is. We should be a period of seasonal weakness right now, and we've been rallying this whole time. Look at cattle. This is where a lot of the trade action is. Big moves higher here in this last week or so, and the futures market leading the cash higher. Certainly can make the case that packer margins are suffering because of the higher cash trade that they've had to pay, especially over this last week. Here's a seasonal pattern, lower during this time frame, and again, we are moving sharply higher, very counter-seasonal. Go back to the continuation charts, 126.32, we extend that out, and that's our next resistance point for this December contract. And really, after gapping higher yesterday, extending those gains today, we're looking at feedlots being very bullish and expecting higher cash trade once again this week. The show list numbers are actually larger this week than they were a year ago. They're about 263,000 head on the show list, up 20-some thousand from a week ago. Fed Online Auction has 1,500 head listed for sale. That'll be held Wednesday at 10 o'clock Central Time. Box beef did improve in the choice on the close, up 312. Select was only 26 higher and decent load count, so that'll help the packer margins recover a little bit. But certainly these futures markets getting bought, extremely overbought, but with money flowing into the pits here, it's going to be hard to take this market back down. In the grain trade, soybeans came and tested their uptrend line. We got that drawn here on this chart. They're holding in this pattern. We really need some demand news if we're going to break above and continue this uptrend. Otherwise, we're probably going to slip back in here. But I think we've got enough harvest under our belts. Harvest pressure is really not going to affect us any longer. And if we can get some demand news, we should see this market take another run or next leg higher. Unfortunately, we hit contract lows today in the winter wheat contracts. Here's Kansas City chart of a new low, and in Chicago, new contract lows there as well. Minneapolis is holding its contract lows. We're just kind of sitting above those lows. Well, all these lows from this fall and summer lows. We go back into April, we can make new contract lows, but I don't think we're headed back into that area whatsoever. Corn is also hovering just above its contract lows. We had an export sale announcement, 100,000 metric tons of hard red wheat sold to Iraq. Really didn't do much for the trade as that was already factored into the market. Corn should find support around this 344 area and hopefully can bounce out of here as we turn the calendar to November. We'll have FC Stone and Informa crop estimates coming up the next couple days. That could set the tone for markets in here if they see a declining soybean crop, which, remember, back in October the soybean crop did get smaller, and if FC Stone confirms that, Informa confirms that, we could see some strength in the beans over the next several days. All right, have a great night, everybody, and we'll talk to you again tomorrow morning. This has been Brian Hoops from Midwest Market Solutions.